Welcome to TheoTrade. This is Don Kaufman. Here we are doing the weekend update. It's October 8th, 2016. I'm going to kick it off by taking a look at some of this past week's trade, followed by a little bit of an election preview since, it's on everybody's mind right now. It's in the media nonstop. If you're anything like me, you've pretty much tried to do your best to tune it out, especially this weekend. Nevertheless, I know many of us will watch the debate, but we're going to show here momentarily what is really being priced into the markets regarding the election. So, hey, put all the candidates and all the politics aside. We're going to look precisely what the election is pricing risk to be. Before I get detailed into that, we'll take a look at this past week of trading. I'll start specifically with the SPX. Of course, the S&P 500 here. What did we do in 5 days of trade? Absolutely nothing for the most part. So it was a very mild week. We had some lighter trade earlier in the week, picked up as the week progressed over here. The jobs report, the employment situation that came out yesterday, of course being Friday, was very much kind of a non-event. However, there is one thing to be said for the last few days of trade over here. We had extremely large intraday moves, and that is to be noted, and that's actually one of the reasons I wanted to pull this up, just to get a quick feel for this. This is the SPX, and these are moves that happen during the cash trading session. That's why specifically I'm pulling up the SPX. The SPX is open during the cash session, not the S&P futures, which are all, of course, open in the evening session as well. But pretty much every single day throughout the course of the week over here, we're throwing off 20-point moves in the SPX from high to low. And frankly speaking, I do have time to sit in front of my computer and trade throughout the course of a day, and I like these kind of days. I mean, come on, 3 days during a week where you're getting 20-point plus moves. Sure, there were some quiet times during the course of a week. Nevertheless, I like it. I like when there's some action over there. And if you do look at the S&P futures, including the overnight trading range, the moves are even more substantial. Now, I have been mentioning day in and day out, if you're tuning in here to TheoTrade, levels, because we've just been trading ultimately from level to level. And every day you kind of wake up and this binary move, and that just basically means it's a coin flip. All right, you wake up in the morning. If you're going to trade throughout the course of a trading session, you should know that they're binary moves right now. We wake up, all right, we get a catalyst, some news event, we trade, right? Then we trade the other direction throughout the course of the day. But all we have been doing, and again, what you're looking at here, it was 30 days, it's just 1 hour charts. But what I wanted to do is just zoom in, and this is the S&P futures on this week of trade, and how pertinent the levels that I've been discussing really are, that we're just pinging back and forth from 2153 on down to 2143. And again, we've done it numerous times over here. Frankly, I was a little surprised at the close, that we closed at 2146. I figured, hey, why not? Let's just head back down to the 43 level. Nevertheless, that it does provide some great opportunity, again, on an intraday basis. But not everybody necessarily trades on an intraday basis. So let's back away from some of the intraday discussion. Let's back away from what happened this past week. Not too exciting. Again, if you had time to sit in front of your computer, though, you got some nice two-way trade. And again, as I trade on an intraday basis. I trade mid-duration. That's option strategies, everything from in-out spreads, to selling premium. Although selling premium right now has been a little bit difficult. I also trade longer duration. Which means, positions I'm going to hold for months, an investment portfolio. Nevertheless, I have to appreciate some of the two-sided trade that we've seen as of late. Can't ask for more, again, as a trader. Now, let's focus on a little bit more of the broader markets as a whole and individual underlyings. First I'm going to bring up Amazon, and Amazon's notable to me. If you are a market technician, Okay, what does that mean? Well, it means you look at charts, you look at different studies over here. I'm going to speak to you a little bit. If you're a little bit more like me, again, I'm much more the, into stats, much more quantitative trader. This move in Amazon has really kind of caught us from 760 all the way into the 850 range. Roughly speaking, you're just shy, just shy of $100 move in what is now, sitting around its all-time high, achieved on Thursday of roughly 847. Nevertheless, one thing I want you to look at inside of Amazon is the idea of Amazon getting ready to roll over. If you are not so much in, when I say the statistical side of the marketplace, what I'm looking at is the sheer magnitude of this move. And I've done this a number of times in a few videos, but I'll just point it out once again. And if you've seen this before, fantastic, because I'm going to go into a little bit more detail here. But this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trading days. So that's 15 trading days of a move that amounted to, and again, I'm just going to round it over here. Let's say the move amounted to a total, of $90. So it's about a $90 move, and that's not the expected move. That's the realized move. That's the actual move that the underlying made. So it's $90. Now, what typically happens in a 2 or 3 week period? So we cruise over, and I'll close up this left side bar over here. We cruise over to the option chain and open up the option chain that's about 20 days out. And that option chain, this is even going to incorporate earnings. So if you took a look at Amazon, Amazon has earnings coming out. And I want to show you, again, statistically speaking, how substantial this move is. Even if you looked, at an earnings announcement over there, still only a $60 move, and that's 20 days from now. So when we talk about statistical significance, right, it's when a product moves 2, 3, maybe even sometimes 4 times its expected move. And we can use the term standard deviation. So for example, in the next 13 days, it's 2 weeks of trade, you're expected to see this product move about $25. That's what the option market currently says. Well, would it surprise you if a product didn't move $25? If the product moved, for instance, $100, what? It's moving 3-4 times its expectations. The chances of what they term about like a 4 sigma event. 4 sigmas, that's, again, 0.0001% chance of something like that occurring in such a short time period. But nevertheless, Amazon did it. And that's why, as a contrarian, I like to take that position. Now, for those of you that are market technicians, listen, I may not be a market technician, but I still understand technicals, right? I worked, at thinkorswim for 15 years, and I worked with the charting group there as well. So yeah, very familiar with many of the technical studies on here, think scripts, A couple things I'll point out on a technical level. Number one, you can see the burst of volume starting to subside. Number two, down here on the RSI, and this is the RSI Lagrange, which is something that we have actually had coded for us. Share the script over here, but you can see overbought, hasn't actually come off. This is fractal energy down here. Ultimately, what it's saying is, well, this thing's probably run out of steam. So I'm already in a position, I am in a short position. That short position has only got 13 days left. I don't want to mess with earnings. Think about it, it's Amazon, it's a very, very short-term position. Now, Amazon, done. Let's get into the election and discuss a little bit about the election, because that is, again, it's on the forefront of every media venue in any way, shape, or form. What to expect in the election. Well, I don't want to burst anybody's bubble over here about the election, but the markets are pretty good at pricing in risk, and they've been incredibly efficient lately at doing so. So I think the best place to talk about the election is to look at the implied volatilities, well, during the election. And here we have, it couldn't be any easier than this. This happens to be a November 7th expiration. Now, if you were aware, maybe you're not aware, all right, the election will happen on November 8th. Will we actually know the outcome November 8th? Well, That's a different story. Most likely the answer is yes, we will know the outcome. But what we want to look at is the difference between November 8th and November 9th. Why? This happens to be the Monday expiration. Right here, the 9th happens to be what? None other than the Wednesday expiration. So if there's going to be substantial and inordinate risk in the election, shouldn't that be distinguished in the option pricing? And the answer is, of course. It's only 30 days out. 32 days includes the election. Here's the difference. Okay? The pre-election shows about a 12.5% volatility. Post-election, we're at about what? 2 points higher on volatility, to a T. But what does that really mean for you, and how is this calculated? Well, I'm going to show you another way of taking a look at this. And to do that, what I'm going to do is I'm actually going to open up two different option chains in here. So November, all right, 7th in this case, and we're going to look at the money straddle. Okay, what is an at the money straddle? It's just buying the at the money call, the at the money put. It's trading for about $57. Now that happens to be November 7th. That is pre-election. Now, simultaneously, I'm going to bring up another trade just to, again, to display what that risk happens to be. What trade? Well, I'm going to pull up the exact same trade, but now I'm going to pull up that trade for the November 9th expiration. So go in here, buy straddle. Okay, what are we now looking at? Well, here we go. You really want to know how much risk is being packed into this election, right? You want to know. So here it is. On November 7th, the expiration, they're pricing in about $57, movement between now and then. That's all it is. Listen, if the market felt there was going to be more risk between now and November 7th, it would display it. Then we look at the November 9th, which of course includes 2 extra trading days. And its straddle, the exact same chain, right? The exact same trade. And when I say the same chain, it's the what? 2150 call and put, 2150 call and put. The only difference is that there's 2 days, differentiating, and an election. It prices about $10 higher. What do you learn about the election? Yeah, I think you need not worry at this point. The market's actually saying, done deal. It's saying done deal. Now, for whatever it's worth, could there be odds and ends and risk that come up between now and then? Absolutely. But if you're worried about that, just watch the implied volatility, again, between the November 7th and the November 9th. And it's going to tell you everything you need to know about the election. Now, when it comes to election-style trades, that's where we're actually going to help you. In fact, what we're going to do at TheoTrade is in and around the election, we're just going to open up, our chat room and open up TheoTrade to everybody. Why not? You could be able to join us during the election. And if there's going to be election-based trades before the election, I'm going to share them with you. If there's going to be election-based trades during the election, we're going to share them to you because we're going to open up the room. I would expect a little bit of volatility. It's going to be fun, right? Watch the electoral votes come in over there in the electoral college. Yeah, we'll do it. We'll have a party. It's going to be great. But hey, listen, right now, they're not pricing anything in. And why do I say they're not pricing anything in? Well, but Don, there's a $10 difference. But there would be a $10 difference, based on the fact that what? There's 2 days in between anyway. Shouldn't the November 9th probably have a little bit more risk given the fact there's 2 more days? Sure. So they're pricing it in right now, again, as almost a non-event. Does that stand over there? Well, we'll see. Again, there's a lot that can happen inside of a month over here. And, if you're sitting here and you're watching this weekend, and this weekend happens to be the second debate, there's huge news out this weekend about both parties. All right, some people are calling the campaign done over here. We'll see. A lot of time left on the clock. In 30 days, don't count anything out. If you looked at the betting sites right now, it's all over and done with. If you're looking at the market right now, the market too is pricing it as all over and done with. It's literally pricing it as a non-event out there. Nevertheless, still quite a bit of risk over here, and we're going to keep you up to date at on a day-by-day basis here between now and the election. But again, when it comes to the election itself, if you need election-based trades, if you're looking for hedges, what's a hedge? Well, there's a chance, the markets could not like the candidate that gets elected and tank. Well, we got a hedge for that. We'll give you a risk twist spread for a hedge. That is a downside hedge or a downside opportunity. If you think markets are going to explode higher, don't worry, we got a trade for that. And that's what we're going to be doing for the next month. And then during the election, again, we'll just open up the room and we'll provide notification of how to get that into the future. We got a month between now and then. We'll just open up the room, invite the whole world into the chat room here. We'll talk a little bit about the election. So again, breathe deeply. Not too bad right now. They're displaying negligible risk. All right, let's get back to the present here. What do we expect next week? So what is next week? Well, starting off on Monday, October 10th over here. One thing you want to be aware of, the implied volatility is inherently and incredibly low for this next week of trade. One thing I want to make you fully aware of is there's FOMC Minutes coming out this next Wednesday. So if you haven't looked necessarily at a calendar, you'll see the FOMC Minutes on October 12th. Back over here to the Trade tab, look at the October 12th expiration, and the implied volatility is incredibly low. And I'm going to tell you why. There is a major Jewish holiday, falls on the exact same day. The volume and liquidity is likely to be relatively low. It is Yom Kippur, so the markets are not officially closed out there. Nevertheless, it happens to be one of the lighter trading days. And it does not mean the markets can't move. Sometimes low liquidity days can cause a bit more of volatility on an intraday basis. Nevertheless, right now, through Wednesday and the FOMC Minutes, the markets are only expecting about a $21 move. And need I mention once again, these expected moves have been near spot on lately. All right, you need to be looking at expected moves. Now, I recognize that many of you are like, well, I don't trade the SPX. That's okay. You don't have to trade the SPX. You might be looking at something like Apple or Google or Amazon or Facebook or any of the other big players out there. But every one of them is being influenced by what's going on in the broader market. Thanks everybody for joining us here at TheoTrade. I'm Don Kaufman, beyond TheoTrade chat all throughout the course of this week. And again, feel free to join us throughout the now to the election and during the election day. We're going to come to you live, opening up the room to everybody. Have a great weekend. Bye-bye.